I'm Aarati Krishnan and you're watching A to Z of stock market investing. Today we are going to talk about M for market capitalization. Amazon has become a more valuable company than Walmart. Recently, headlines screamed in the US. How can this be? Can it be that Amazon has suddenly acquired more facilities and worldwide operations than Walmart? Not true. Actually, this came about because Amazon's market capitalization in the US stock market managed to cross that of Walmart. Because of its quarterly results being very good, Amazon's stock market capitalization climbed to $262 billion, higher than Walmart's $233 billion. Market capitalization can be used to measure the value not just of companies but also of entire countries' markets. For example, many people argue that the Indian stock markets are undervalued today because its market capitalization is just 76% of the GDP. Basically, market capitalization is the value of all the outstanding shares traded in a particular market. With reference to a particular company, it is the value of all the company's shares if you multiply the current market price by the number of shares outstanding in the market. To give you an example, Reliance Industries, for example, has issued 323 crore shares to all its shareholders. You know that when a company goes public, it issues equity shares to people. So this is how Reliance Industries has arrived at a equity share outstanding of 323 crore. Now each of these shares, if they trade at rupees 1000 in the markets, it arrives at a total market capitalization of 3.23 lakh crore for Reliance Industries today. The full market capitalization is basically the value of the company's entire issued share capital. So whatever it has issued to whatever category of shareholders, it comes into the reckoning in full market capitalization. Free float market capitalization refers to the value of shares issued to all investors except the promoters. Typically, in the construction of indices in India, for example, it is the free float market capitalization of a company which is taken into account. Both the BSE and the NSE, when constructing their indices, actually make sure that the most valuable companies in the market, by virtue of their free float capitalization, tend to figure in the index. They prefer to take free float instead of full market cap to ensure that there is enough liquidity in the stock. There are a large number of stocks available for trading. Often, institutional investors and mutual funds use market cap criteria to design the investment strategies of their fund. For example, if you go and look for a nice equity fund to invest in, you will find that on the menu there are a large number of large cap, mid cap, small cap and micro cap funds. There are even funds which invest in a combination of these. Now, these funds basically define their investment strategy in terms of what kinds of stocks they will invest in. The stocks are categorized based on their market cap. So funds typically define themselves in terms of large cap, mid cap, small cap or small and micro cap funds. The categorization is as follows. Usually stocks that have a market cap of more than 10,000 crore are taken as large cap stocks. Stocks with a market cap of more than 5,000 crores are taken as mid caps. Anything between 2,500 and 5,000 is small cap. Anything below that is tiny cap or micro cap. While market cap is often used as a very quick and instant gauge of how valuable a company is on the market, it is by no means perfect. This is because a market cap does not really define the size of a company's sales, profits or other parameters which really make it tick, right? So a very large company in a particular sector which is a market leader, if it has very few equity shares outstanding, it can still be a small cap company. In fact, there are many sector leaders in India which are actually falling in the mid cap or small cap category. Acquirers often use a measure called enterprise value to measure a company's worth. Enterprise value is a sum of the company's market cap plus the loans outstanding. So in that old comparison of Amazon versus Walmart, if Walmart has actually borrowed a lot more than Amazon to set up its business, it will have an enterprise value that is far higher than Amazon's. Therefore, to an acquirer or anybody looking seriously at buying out a company, it is the enterprise value which is more important than the market capitalization.